And welcome everyone to another wonderful episode of CRYPTOGRIFF, the crypto phenomenon. Alright, let's get this started. First things first, the cryptos industry. Favorite bank is in deep trouble. The good news about the collapse of Sam Bankman-Fried's cryptocurrency empire is the failure did not send shockwaves through the entire financial system and create a contagion. A key reason is that most banks have refused to deal with crypto. Recently, U.S. banking regulators even discouraged them from doing so. Well, banks don't want decentralized assets because that would put them out of business entirely, relinquishing the power that they have over us now. Considering that the IRS and the feds and everything all correlate with the banking system, therefore, if they want your money, they're going to take it. You don't own your money, just like you don't own your property. But one small California bank apparently decided it was better to risk having to beg for forgiveness than wait for permission. In recent years, La Hala-based Silvergate went all in on crypto, forging relationships with more than 1,600 players in the industry, from hedge funds to exchanges to token projects. That includes alleged fraudsters like Bankman-Fried, along with a slew of other sketchy companies and individuals who used Silvergate to move $1 trillion in and out of crypto markets all over the world. With regulators and investors alike casting a sharper eye on the crypto world after the chaos of the past year, Silvergate now faces unanswered questions about its crypto products and its future business prospects in general. The bank's outsize role in recent crypto bubble and bust is perhaps best described as Bankman-Fried himself, as this indicted FTX founder put it in a now deleted testimonial on the bank's website. Life as a crypto firm can be divided up into before Silvergate and after Silvergate. It's hard to overstate how much it revolutionized banking for blockchain companies. Now, I will butt in and say something that the banking system is, in fact, broken. The safest way to hold your money is for you to hold your money. So, self-custodying your digital assets is way safer than having some other custodial unit, per se, holding your assets. Because, A, they want to freeze it. Like Coinbase, for example. Anytime the market's pumping like crazy, they freeze their trading. All right? That's just a load of horse crap. I've used Coinbase since the day they launched. I mean, it's horrible. It's really horrible. All right. In the wake of FTX collapse, critics of the bank's practice believe further regulatory scrutiny of the revolution will leave Silvergate in an unsustainable situation. It was one of the biggest gateways from banking system to crypto business, says Porter Collins, portfolio manager of Seawolf Capital and one of the figures in The Big Short. He thinks that the crypto long-term bull market and Silvergate's role in it is over. And he begun shorting Silvergate last summer as the crypto meltdown gained speed. The bank's shares have plunged more than 80% over the past year. Investor Mark Cohodes, an outspoken Silvergate short seller, argues that its customers demonstrate a high problematic pattern of potential criminal activity, which will have negative repercussions for the bank. Why? Nobody talks about the bank's illegal activities. Intelligencer has obtained documents showing that in addition to FTX, Silvergate has been the go-to bank for more than a dozen crypto companies that ended up under investigation, shut down, fined, or in bankruptcy. These include the U.S. arm of Binance, the world's largest crypto exchange, which Reuters has reported is under a criminal probe for money laundering, and a formerly Chinese-based offshore exchange, now with the Seychelles address, called Huobi, whose CEO, Justin Sun, is likewise under investigation for money laundering, according to The Verge. Court documents show that the Silvergate also did business with recently bankrupt crypto companies Voyager, Celsius, and BlockFi, while online video shows crypto lender Nexo, which just agreed to a $22.5 million settlement with the Securities and Exchange Commission, directing customers to send money to the Silvergate bank account. Wow. Now, you guys can come and read all of this. I mean, this information is on multiple different websites and news broadcasts. It's pretty easy to get this stuff. One thing that all of this is coming down to is showing this back and forth movement. There's always one individual party that stands. I've seen this. We've talked about it before, and probably like 20 episodes ago, where you'll have this group of people, these powerful group of people, usually in a form of government or high standing at somewhere in there. And every time this stuff's happening, it's happening either in a pandemic or a media shout, like the last one with the toilet paper. I mean, it's media manipulating us so they can do what they can behind the scenes without us seeing it. And this is the stuff that they're doing behind the scenes. Somebody's got to take the blame, but the money's still got to go somewhere. And it's not going back to you. All right, so we're going to skip through some of this. You guys can come back and read this if you want, but I'm going to get to this little bottom section here. To Silvergate CEO Alan Lane, who joined the bank in 2008, the underbanked and novel crypto business looked like a sunfire, way to grow the bank's deposits following the financial crisis, in a 2019 interview with crypto promoter Anthony Pomplino. Lane said in his Silvergate crypto journey began when he learned crypto companies were getting kicked out of banks over concern about money laundering. By 2014, Lane had signed on Silvergate's first crypto customer, Barry Silbert's Second Market, which has since become crypto broker Genesis Trading and is part of the digital currency group, a crypto conglomerate Silbert heads. Come up with some weird stuff. Silbert is facing his own woes in the train wreck of that crypto has become over the past 9 months. Genesis declared bankruptcy on Friday, and Cameron Winklevoss, name drop, co-founder of crypto trading Gemini, which has close to $800 million in customer funds with the firm, has called on Silbert to resign, accusing him of fraud. After Bloomberg reported that the digital currency group was under investigation by federal prosecutors and the SEC, the letter charged both Gemini and Genesis with offering unregistered securities. In happier times, Silbert provided Silvergate with introductions to other crypto players that helped transform it from a sleepy local bank that had managed to avoid 2008 housing crisis into something of a casino dealer for the crypto ecosystem. DCG was also the lead investor in a $114 million Silvergate private placement ahead of the bank's IPO in 2019. For all the antagonism crypto enthusiasts have towards fiat currency, they all still need and want access to old-fashioned dollars, or euros. People aren't native crypto users, explains Hillary Allen, a professor of law at the American University of Washington College of Law. They start with their money in fiat currency, and then they want to get out of crypto. They want their money back in fiat currency. So in order to make that possible, there needs to be a relationship with the mainstream financial system. The only way to undo that is, hence why we are, us crypto people, a very newcomer, I'll break it down a little bit for you. A community has to come together and grasp an asset, like say Bitcoin. If we wanted to use Bitcoin as our fiat, so to speak, we would have to actually utilize it as a whole, like we do the dollar. We'd, buy drinks, cars, pay rent, yada, yada, yada. You'd have to do that. You'd have to be able to do that. In order to put it in USD, a government-regulated currency, which is experiencing extreme hyperinflation and constantly dropping the value, raising everything else up, including our taxes, housing, making it harder for us to afford virtually anything. So if we were in order for us to start using a crypto in our day-to-day lives, we actually have to stop listening to all of their crap. We have to actually nut up or shut up. Okay? Next up, Bitcoin drops over 4% amid growing fears of ripple effects from Silvergate saga. Now, this talks a little bit about both aspects of it, so we're going to break it down just a little bit in here. All right, Bitcoin fell to its lowest in over 2 weeks, along with a broader cryptocurrency market amid growing concerns over crypto-friendly bank Silvergate Capital's viability and potential impact on the industry. Craig Erlam, senior market analyst at OANDA, said the Silvergate development brings risks of further negative ripple effects in the industry. This story is a reminder that there could still be more to come and has undermined confidence in the space. Additionally, strong economic data this week suggests that the Federal Reserve could resort to further tightening, which also dented risk sentiment. Recent price action signals from the U.S. macro landscape forces us to be a bit more cautious, said Marcus Thelin, head of research at crypto services firm Matrixport. We would suggest using the September 2022 high of 22.8 as a stop level for cutting 50% of our crypto exposure if prices trade below this point, or this whatever. Bitcoin fell to as low as 22.26 on Friday. Additionally, centralized exchanges liquidated bullish Bitcoin futures worth over $62 million during Asian trading hours, the most since August, CoinDesk reported, citing Glassnode data. Thelin said Silvergate is likely facing more class action lawsuits due to the lapses in due diligence, which should have become aware of that interlinked Alameda, FTX, and North Dimensions accounts were used for fiat and off-ramp without being properly licensed. Shares of Silvergate continue to decline, dropping as much as 15% to notch a new record low. That is not what we call a drop. A drop was that 80% drop, like the Flare token airdrop that we experienced from the XRP. That was bull crap. I'm still mad about that. Dropped 80%. You can tell me you didn't sell any. All right. On to the next one. When it decides to load. Take your time. Hurry up. All right, cryptocurrency. Here come the regulators. The smartest insight and analysis from all perspectives, rounded up from around the web. The sun may be setting on the cryptocurrency craze, said Michael Hiltzik, in the Los Angeles Times. Crypto's decline from a peak market capitalization of more than $3 trillion in late 2021, God, I miss those days, to about $800 billion today, means that the late-stage investors likely reaped enormous losses, and now initiatives in Congress that we were amid at liberalizing the crypto market appear to be running out of steam. As regulators have tightened the screws, evangelists for the new form of currency had claimed it was a financial innovation that would allow those on the margins of financial systems to prosper. But after 14 years of bubbles and scams, it's become clear that the crypto is merely a speculative asset, something to buy and hope that someone else will buy it for more. That's often described as the greater fool theory. What the unbanked really need are simple and inexpensive ways to save their money, but crypto transactions bristling with hidden fees tend to be just the opposite. Crypto's free pass is getting yanked. Because of the sudden failure of crypto exchanges, FTX last year, which lost investors billions of dollars, said Yuki Yang and Kantanga Johnson and Austin Weinstein in Bloomberg, to prevent a repeat of 2008 financial crisis, authorities are now trying to build a wall between crypto trading market and the banking and securities market. The Federal Reserve and other top financial regulators jointly issued a blunt New Year's warning to banks to ensure that crypto-related risks don't affect the banking system. And since then, regulatory actions have come thick and fast. In late January, the Fed barred crypto firm Custodia Bank from coveted access to the central bank's payment system. In just the past week, the SEC fined a crypto promoter and sued a startup that issued digital coins, while New York's Financial Service Department ordered the company Paxos to stop issuing BUSD, a popular stablecoin. In response, bankers are evaluating any exposure to the crypto sector, no matter how small, said Rachel Lewis Enzang and David Bennett in the Wall Street Journal. Banks that were once deep into crypto are reducing or even eliminating their exposure, while those that kept their distance are now actively shunning customers with crypto ties. See, just like ever since, oh my God, I hate to say it, but ever since Joe Biden became president, it's been nothing but hate this person, hate them for that, hate everybody because they're not black, hate them because they're not brown. I mean, now I hate them because they got crypto. Hate them because they don't agree with you. Hate them for everything. Hate them because they're not you. That's just, this whole society has just become a, what's the word they use? They made a movie about this. It's called Idiocracy. It is literally an idiocracy. You know, we're going to get to it here in a minute about small businesses and how hard it is and how larger corporations are trying to make it almost impossible for us small businesses to actually thrive. You know what happens if you lose small businesses? Everything. We're the ones supporting the entire economy, not these larger corporations. You can go online and you can look up the numbers and the statistics. Without small businesses, the economy will die quickly and harsh. Now, back to where we were. After Wall Street's Journal. Banks that were once deep into crypto and reducing or eliminating their exposure, while those that kept their distance are now actively shunning customers with crypto ties. This Restructuring is bringing the light to the extent to the crypto businesses that pitch themselves as an alternative to banks still rely on those institutions for access to hard currency. When Citigroup Inc. was another red flag, abruptly closed the account of Swan Bitcoin, for example, the company had to scramble to pay its employees. This aggressive government crackdown has caused outrage and anxiety in the crypto industry, said David Bellany, in Crypto New York Times. Kristen Smith of the Blockchain Association is industry group called it a crypto carpet bombing. After the SEC reached a settlement with the U.S. crypto exchange Kraken, removing one of its products from the market, XRP, the company's founder briefly posted an obscene meme about the agency's chief. And this upheaval won't end anytime soon. Industry lawyers say that the spate of enforcement is likely just a prelude to a protracted spell of legal wrangling. All kind of like the whole lawsuit with XRP and Ripple Company. That's the SEC and the whole entire government behind, well, our government is bullies. They're just bullies. And that was the end of the article. And here we go to here. It's okay, guys. Bear with me. There's only a little bit more I wanted to share. All right, so kind of just look up certain things on here, and I like to see what the answers are. Now, Google and Brave. Well, Brave. All right, just remember Brave browser, the one I'm on right now. It'll spot trackers and ads and stuff like that and take them down, but it still utilizes the Google routers, so it's still part of Google. Whether they want to say it or not, it's still cool, but still part of that system. All right, so the economic outlook for the United States in 2023 has deteriorated under the weight of high inflation rates and rapid monetary tightening, falling consumer and business confidence, softening consumption and investment, and geopolitics. Introduced energy shocks are likely to tip the economy into a recession around the turn of the year. And I just talked to a few of my friends about this in Telegram earlier today, how the economy is going to go down, and it's going to be a harsh coming back. The inflation that we're going through now, and everything else is going up. All of our stuff's going up, and the dollar's value is less, but yet we're still getting the same amount, if not less, of the dollar. So we're virtually just getting screwed, epically. It's epically screwing. Yeah, we've been bent over and rimmed out. So, again, the only way to make change is if we all actually did something instead of sitting around talking about it. I'm making a video, right? I'd happily be out there with guns a-blazing right there with you. But I'm not going by my damn self. That's just plumb stupid. All right. And to the next one. This one's close to myself. All right, why do small businesses fail? In the United States, small businesses, mom and pop shops, and entrepreneurs are the backbone, motherfucking backbone of our entire economy. All right? Everything runs off of us. Without us, they have nothing. But these businesses often operate with less than 50 employees and depend on a variety of economic factors. This is true. Get out of there. They can be susceptible to failure. And this is not always because of the business. Sometimes, a lot of times it is, but it's not always because it could be a great business, could be a thrift store, could be a pawn shop, or it could be a candy store, ice cream store. Similar to mine, mobile food trucks. Come on, man. Lack of cash flow, lack of market interest, and strong competition are some of the top reported reasons for small businesses fail. Despite these risks, thousands of small businesses are started every day, and every day more and more Americans choose to be their own bosses. It's your right to be a boss. It is. You know, because most of our businesses in America are owned by people who live in other countries. That's not freaking cool. Despite these risks, thousands of small businesses started every day, and every day more and more Americans choose to be their own bosses. There's a lot of reward that comes with being a small business owner, but there's also a lot of risk. With data from Small Business Administration's guidance, financial reports on small businesses, and other publicly available resources, the Zebra has compiled these sources to provide a complete picture of entrepreneurship in America. Now, I've been up and down through all of this stuff. And all these SBA loans, all of these programs, these grants. How do you have a startup funding? All right, you go to fill out a grant for startup funding. They have those. They exist, right? But you want a little good catch. I have to do a video on that because it's just hilarious. You go to fill out the application, right? You're a startup, so your income's going to be zero because you're a startup. You haven't started yet. If I needed a small business loan or a small business grant, but that'd be different from a startup small business grant, right? The first thing they ask is how much money you made, right? And how long you've been in business. And their requirement is to be in business for over a year. If you're a startup, you're not going to be in business for a year because you just started. So they screw you there. Makes no sense. Small business statistics. In June of 2021, the Zebra, a small business insurance comparison site, conducted a national survey of former and current small business owners in order to better understand the struggles, goals, and motivations behind becoming an entrepreneur. Small businesses are a vital pillar of the American economy, yet so many fail each year. Now, if you guys have ever met an inspector or ever opened a business in California or New York, Florida, Michigan, Detroit, there's so many. They are assholes towards small business. They don't want you there. They don't want any of us there. They want corporations and they want everybody to go to one place for everything. That's just how they are. They are not small business friendly. They want you to go where they want you to go. It's bad for us. They're even limited on social media. Try getting a small business on Twitter. Don't believe me? Go ahead and go do it. Try it. I got banned from Twitter, all right, for asking. So Elon Musk and free speech can go suck one. All right, the coronavirus pandemic last year was especially difficult for small businesses. Yeah, it shut me down, cost me my business, my car, and plus me a lot more than that. And did not have an online presence. Our research team looked further into what makes operating your own business so difficult. Over 1/3, 32.8% of small business respondents identified lack of capital. I wonder why. As the number one reason why the businesses had to close. Well, where most of our money goes, right? It's not into our own pockets, obviously. Other factors include strong competition, 19.6% of unsustainable growth rate and 18.75%, and lack of the market's interest at 17.5% as other factors for business closure. Only 1% listed COVID as the cause of their business failure. I wonder fucking why. If you had to close your business, what are some attributing factors? Lack of capital. It's always lack of capital. The customer base was still there. It was fear-mongering and social media that closed these businesses down. That's what it was. Fear-mongering, social media, and peer pressure from outside sources. It's downright gruesome and pathetic how this whole system is being developed and what it's doing to us. If we want a decentralized financial system, you actually have to do it. Any centralized exchange, it is not a decentralized crypto. Even fucking Bitcoin. Excuse my language, I'm cussing a lot in this video. Even Bitcoin, it is registered. It can on a centralized exchange. That means that cryptocurrency can be manipulated. That means someone owns and can stop trading anytime they want on that platform. That affects the value of that asset. So anytime you list on an exchange, you list your token on an exchange, you're giving rights away. All right, you're literally taking money out of your own pocket and saying, here, you can hold all my stuff, even though you're, FTX me or Silvergate me. I'm going to make a pun out of that somehow. But guys, it's just a lot of stuff that's going on out there. And like I said, self-custody is the safest way. Use a decentralized wallet to store your assets. MetaMask, is one of the greatest. Trust Wallet. And they have third-party providers where you can buy crypto. Yeah, their fucking fees are insane, but they're still not as bad as Coinbase, or heck, they're not as bad as Crypto.com. Jesus, I remember doing a $100 trade and it charged me $26. Yeah, Crypto.com is it's down there. Crypto.com can go eat one. All right, and just to end the video, guys, be sure to go down to our website and throw us some support. If you want to help out small businesses and other aspects of our economy, we are here and we're trying to help. We're trying to make a difference. So, do remember, my name is CryptoGriff, and I'm a small business owner. If you guys want to come and throw some support, like, subscribe, leave a comment, and don't forget to share with your friends. All right, guys. CryptoGriff is out.